Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address rshaw@fxcm.com. Today is Monday. It's the 14th of March, 2022. Just going to bring up the high risk investment warning. I'll keep this on screen for a few moments. And good morning, Zanetta. Thank you very much for joining. Hope you had a terrific weekend. Thank you to everyone for joining. Hope you're all well. Have had a good weekend. I'm just going to bring up the market commentaries disclaimer. And let's just go through to our references: FXCM Markets Scope 2.0, CNBC.com, and TradingView. Actually, want to start off with TradingView. Just want to show you guys the bond market. We're looking at the 10 years, effectively what's called the belly of the curve. You can see, let's see if we can zoom in. Just take a look at last week's movement up here in yield. Okay, so and if we go through to this one over here, this is called IEF. IEF, that's the ETF that is reflective of bond prices. So just to give you an idea of what we're looking at, here's the bond prices, here's the bond yields. They are inverse to one another. I can show you why that is, but I think we have done it before. The point being, look how bond prices are coming down. See that? So here, this is actually a weekly head and shoulders on IEF. Here's the left shoulder. And this, I can't remember when we looked at IEF previously. It wasn't recent, but we drew this neckline in a few weeks back. So it just shows you it's completed now. The pattern's completed. Here's the head. Here's the right shoulder. Okay. So bonds coming down. Take a look where the stochastic is, right? Stochastic's now in this sitting in the lower quintile. If it sticks there, we're going to see further declines in bond prices. We've got to ask ourselves, what does that mean? What does that mean, right? Let's just go through to the yield. Okay, this is also head and shoulders. Let's just go back maybe. There's the left shoulder, the head, the right shoulder. You can see, look where the stochastic is. It's in that upper quintile. So it looks like we're in for higher yields on the 10-year. The money is flooding out of bonds, pushing up yields. That's and it's fairly. I mean, this is a long-range candle. It's fairly fairly rapid. Last week it was fairly rapid as the geopolitics unfolded. So what do we glean from that? Inflation. You see, bonds, holding bonds in an inflationary environment, unless you've got inflation-linked bonds like TIPS or something, what you typically do is you'll try and just get out and go into bonds that offer a higher coupon, right? Because you don't want to be behind the curve with the purchasing power of your investment. So they're just selling out of bonds at the moment, and that's reflecting inflationary pressures globally. Okay, so that's just something that I think it has. Last week it was sort of an obvious move, just given this long candle bond yields. So we must just keep that in mind. Yields are moving up. Why must we keep that in mind? Because clearly yields are going to be sort of the catalyst for the instruments that we're looking at. All right, so I wanted to just show you that. Let's go through the CNBC headlines, and then we'll go through to our market scope. So the headline on CNBC reads as follows: European markets head for positive open amid renewed hopes for Ukraine-Russia talks. European stocks are expected to open higher on Monday ahead of further talks between Russian and Ukrainian negotiators. Global attention remains on the war in Ukraine after a weekend of intensified fighting around the capital Kiev, while Russian forces bombarded cities across the country, killing civilians who are unable to escape. Russia also attacked a Ukrainian military training center near the Polish border on Sunday, killing 35 people and wounding 134. Sanctions continue to hit Russia hard, with the financial fallout for Moscow's invasion expected to come into sharper focus in the coming days ahead of a scheduled sovereign bond payment. Talks are taking place again on Monday in a bid to establish a solid ceasefire and find room for any compromise between Russia and Ukraine's demands, although previous discussions have ended in failure. The US Federal Reserve is also in focus this week, as it is expected to raise its target Fed funds rate by a quarter percentage point from 0 at the end of its two-day meeting on Wednesday. Investors are also looking to the central bank for its new forecasts for rates, inflation, and the economy, given the uncertainty from escalated geopolitical tensions. US stock futures rose in overnight trading, while shares in Asia Pacific were mixed in Monday's trade as investors monitor a COVID wave in China. And I think it's Shenzhen which has been effectively put into lockdown. There are no major earnings or data releases in Europe on Monday. All right. Let's take a look at market scope with the knowledge now that yields are moving up, bonds coming down. Also we're starting off with gold. This is the gold 4-hour chart, and we'll move up to the weekly in a moment. Just wanted to put in our labels for the 4-hour. Peak, trough, lower peak, and here's the lower trough. Okay, and Zanette is just asking where am I reading the global news? It's from CNBC. So if you just go to cnbc.com, and then there is a specific every morning a specific article related to the European Open. So that's where I'm getting it from. So you can see here you've got your peak, trough, lower peak, lower trough. Well, that's a downtrend, right, on the 4-hour. So gold does seem to be moderating. It's coming down, and we're going to just explore this in a bit more detail. I just want to go up to the weekly. Let's see what the weekly chart looks like. All right, let's take these out. Okay, so those were obviously labels that were easy to read on the 4-hour, not so easy on the weekly, right? What we want to just keep an eye on for the weekly, we've got a heavy selling tail here. This is an inverted hammer, and you can see exactly the movement on the 4-hour. I'll go back to the 4-hour. Okay, zigzagging down. So what's happening here is that if we have to look at this in terms of just the weekly, the bulls took price all the way up to this point here. At that stage, the bulls lose control, the bears take over, and the price of gold ends well down off its highs for the week. What's the big sort of question mark? The question for this week is, do the bears take price below last week's low? Because then we've got a reference candle reversal locked in. So we're going to have to monitor that for this week. And the stochastic does a drop out of 80. Now, for me, because of the geopolitical crisis, gold becomes a number one, it's an instrument that we always look at, but it also becomes to me a indicator of the potential for stagflation in my estimate. In other words, if gold continues to drop, then the stagflationary scenario perhaps moderates. We're just going to have to see if that's the way it pans out. I'll show you this in a moment with the US dollar, sort of what my thinking is, and of course any comments you guys have, you're welcome to type those in. I'll read them to everyone. Howard, no worries. All right, Howard's just joined. Welcome, Howard. Nice to have you on the webinar as always. I think, in fact, let's just talk about gold and the stagflationary scenario. What I'll do is let's go through to this here. I'm not going to look at Bitcoin right now. I just want to go through to the US dollar. I want to change this to the weekly. And there's a difference to what is happening here in the markets. Take a look. Let's just go back to that gold chart. Let's take the RSI out. So we're just looking at exactly the same charts. Okay, so my thinking is as follows. Let's just take this all off. Okay, so we have two instruments that are showing, in my opinion, both showing uptrends. In terms of gold, we can just draw it in as follows: 1, 2, 2, 3, 1, 2. So there you've got your higher trough followed by your higher peak. You could do very similar with the US dollar. 1, 2, 2, 3. This actually should come from there. 1, 2. Okay, I think that would be more correct. Let's just move it there. So in other words, we've got uptrends, but what is interesting is the movement last week. Okay, so let's go back to those 4-hour charts. Okay, let's go back to the 4-hour charts. Now the 4-hour charts are different. So while the weekly charts both show uptrend, if we take a look, say, from here, let's see if we can get the same. It would be here. Yeah. All right. So on an absolute level, we've got gold coming down. On an absolute level, sorry. On an absolute level, we've got dollar moving up. And that to me is interesting because the dollar seems to be responding to so Howard's asking the right question. If gold is a safe haven, why did it go down last week? So we know that it went all the way up. This is what we said, all the way up until the high. At the high, Howard, that's when the bulls lose control, bears take over, and Howard's asking the question, why? And that's the key question. Why is gold coming down? Why is dollar moving up? And again, it's worth monitoring. We don't know anything. We don't know anything for sure. You know, what we can do is make inferences from the information that we see. So if gold's coming down, Howard, what is that suggesting in terms of, say, the conflict and stagflation? It would suggest to me that there is a confidence, or that the peace talks or these talks that they're going to have may yield something in terms of a de-escalation. Now, again, I don't know if that's the case. I'm not saying that is the case. I'm just saying the market perhaps forecasting that there is going to be some movement some way in terms of de-escalation. The fact that dollar moving up as opposed to gold moving up versus the dollar, in other words, the market now starting to anticipate federal the Federal Open Market Committee's announcement on Wednesday. There seems to be almost a shift of focus now going back to traditional economics away from the geopolitical concerns. That's why I said we're going to be watching gold like a hawk here. Okay, we're going to be watching gold like a hawk, because if gold all of a sudden sparks up, that means that the markets look forward looking. It never looks backwards. Market's always anticipating forward. Whatever's happened in the past, that's been discounted into prices, and now markets are moving in anticipation of what they think is going to take place in the future. So the fact that the gold price coming down suggests to me an anticipation of de-escalation. Am I certain of that? Absolutely not. I think that we're in a terrible situation. But the headlines that we read last week were awful headlines. The headlines that we read this week, just to start off the week, seemed a little bit more optimistic. Again, is there going to be progress made? I have no idea. You know, I think the resilience of the Ukrainians has completely shocked Russia. I think the reaction by the West in terms of sanctions has completely shocked Russia. I think that Russia has made a miscalculation here, and the key now is can a de-escalation be manufactured where Vladimir Putin doesn't lose face? And I think that is the challenge. I don't see it actually as being possible, but I think that's the challenge. But the market seems to be suggesting that there is perhaps a de-escalation coming, because there is less of a focus on gold, more of a focus on monetary policy. Just as because that monetary policy coming in on Wednesday. By the way, there was not a headline. With Bloomberg, you also every morning you get a five points that are moving the market. One of the points, I just had a glance at it. It said that Russia had gone to China and asked China for help regarding its war in Ukraine. I mean, that's kind of embarrassing for Russia, you know, going to sort of your ally to help you because you've miscalculated, you know. So I think that's what we're seeing in gold. And again, I'm going to say subject to correction, okay, because we don't know. What I can do is make inferences from what we see. So you can see the gold price getting pushed, and US dollar is stronger than gold at the moment. Let's take a look and see. What the DAX is doing. Okay. All right. So here's the DAX. Let's actually go to these charts here and use the DAX. Okay. So let's just try and understand last week's market sentiment. And again, it's just so difficult to make sort of these comments or inferences that are that you can really sort of say are going to have a good probability. Again, I mean, just to reiterate with that gold, we can make inferences. The probability of that de-escalation, well, I don't know. I'd have to leave that to the military experts. But What we can see here is a Zanetta saying no clear picture yet. Exactly, we can only make inferences. No clear picture yet. Take a look at last week's. What do you guys see in terms of last week's candle action? What do you guys see here? So this is the weekly. So this is what we call a spinning top, right? And you can see that the bulls, a lot of bulls went bargain hunting, okay, and they get rejected. A lot of bears sold down further, they get rejected. So we're pretty flat, which is exactly what Zanetta said. No clear picture, right? That's exactly what Howard says here. Indecision, right? We've got uncertainty. Why is there uncertainty? Why is there indecision? Because there's no clear picture. All we can do is make inferences, right? And that's how we start the week. Now, I think for our purposes, the way that we used last week's candle is to use it as an anchor for the reference candle reversal. So we just put in an ellipse here, and we say, this is what looks like the lowest low in at least 3 candles. Once we've got that, okay, we draw in our line in the sand, and if we're able to close above last week's high, well then maybe we have hit the low. Maybe we have. We've got to just be careful not to be caught in that bear market rally. Okay, but we're going to monitor this like a hawk. How are we going to monitor this? Well, we're going to look at gold. Does gold continue to decline? Because that suggests maybe, okay, that there is some sort of progress in terms of talks between the Ukrainians and the Russians. If there is, and that's a big capital I, capital F, if there is, then perhaps we do close above last week's high, and perhaps then the portfolio managers go bargain hunting on a large scale. And maybe this is a dip for us to really try and exploit. But as Zanetta says, as Howard says, there's no clear picture. We're in an indecisive sort of environment. We can just wait for some clarity and wait for the reference candle reversal to play itself out. Now, take a look at this. We're going to put DAX next to gold. So let's go back to this over here. Let's change this to the weekly. Okay. Let me clear this up for you guys. Let's take this rectangle out. Okay, cool. So this is the DAX. So this is just to show you what we're looking at here. Remember, this was the lowest low. This was our line in the sand. Now take a look at this compared to gold. Okay, so let's bring gold next to it. Okay. Sorry. Okay, let's go back here. This one must change to gold. This one must change to weekly. Okay. Let's take this out. Just delete that. Can you guys see the mirror here? Take a look. Let's see if we get the mirror. You guys see the mirror? See that? So now we've kind of got this point where we've got the lowest low looking for price to take out last week's high. Jump across to gold. We're both looking at weekly. We've got the highest high in at least 3 candles. Does price take out last week's low? Then, okay, hopefully again we get some sort of progress in peace talks. Okay, we can only hope, and then maybe gold starts moderating. Maybe then there's bargains aplenty to be had on the market. You see, so this is our job for this week, to monitor the headlines, what's going on in terms of reports of meetings between the two countries. How's the market reacting? Do we see do we see the stochastic making its way through towards the 80 level for DAX? Do we see the stochastic moderating and heading towards 20 for gold? Those are going to be, I think, big market signals. Now, markets are efficient in terms of processing information. Okay, so there is an efficiency there, but the information, it may not be efficient. So we can be talking, well, wait a second, look, gold looks like it's moderating. The DAX looks like it's found some sort of bottom. Okay, as soon as information comes to light, which is antithesis to that hypothesis, the market's going to discount that. So in other words, let's assume that there are talks. Let's assume that they amount to little, no ceasefire, no safe passages for citizens. That may cause gold to spark, may cause DAX to drop. That's why we don't want to get caught in these bear market rallies, and we want to try and look at gold. To me, gold is the instrument that's going to help us work our way through this uncertainty, and we want to look at it in terms of dollar versus gold, gold versus DAX, and see if we can come up with some sort of intermarket relationships which are helping us to come out with some sort of sensible hypothesis. Let's just go now to the DAX zone here, and you can already see the improvement. You can already see the improvement. We've jumped out of our zone of weakness into the neutral area. So again, there does seem to be the market discounting. See, it's very important that we understand, Howard, markets are forward-looking. When we're talking about risk off, yeah, we were risk off. For some reason, that risk seems to be rotating, seems to be shifting. We've got to ask why, and we've also got to question it. Is it sort of too optimistic? Are we going to drop back into zone 3, which is bearish? That's certainly possible. If it does that, then I think there's heightened escalation. So we're now going to watch this. But the fact that we are out of zone 3 and we've pushed into zone 2, that's a step forward. That's a step towards positivity. If we go towards our hourly chart, here we go, our hourly chart. Now this is looking, again, I would suggest fairly optimistic. Look what we've got here. We've got a nice crossover. Now this crossover takes place with a gap. So the market gaps open. So there was clearly some sort of excitement between Friday's close, Monday's open. The EMA is developing some sort of angle in separation. What's happening with the stochastic? The stochastic is our momentum oscillator. It's heading towards 80. If it hits that 80 level and holds, well, then there's an underlying bullish momentum building. Why would there be an underlying? It's because for some reason the market is discounting positivity ahead. Now, the last chart that we're going to look at today, must look at oil, because to me that's the sort of the X factor. So we go now to oil. All right, and we're going to start week. Now, remember what we looked at last week. Something looks odd here. Here it is. On that weekly, here was the gap. What was our question? Is this really a runaway gap, or is this an exhaustion gap? It's hard to tell. I was kind of leaning towards exhaustion, but you can't. It looks to me more and more as if there was some sort of exhaustion there. And so we go back to weekly. How do we monitor this? There's the highest high in at least 3 candles. Now we draw our line in the sand. Where do we end for this week? See, we've got a whole week ahead of us. We may have a huge blue candle, but that would be escalation in conflict. then we should see DAX coming down hard, then we should see gold moving up hard. Okay, so yeah, but you can see, take a look at this now next to this is the one. Take a look at this next to gold. Gold. Going just back to DAX. Okay, look, it's kind of like a it's a similar chart. Highest peak, highest peak. Are we looking to see a reversal here? Okay, stochastics started to come down. So if we go through to oil, yeah. Okay, let's go through to the 4 hour. Okay. This is a very difficult chart to actually label. Let's label it as follows. We've got a peak here. It's very difficult because these are all inside periods. The trough's down here. Here's your lower peak. But we actually don't have a lower trough. We don't have a lower trough here. So we're just gonna, so it hasn't on the 4 hour, it's not quite as obvious as the gold chart. So we just get, but there is the lower peak. So we'll just keep an eye on oil. You can also see there is some sort of support here. Okay, that's holding around 110 bucks. There's some sort of support here. So we'll keep an eye on oil as well. Okay. All right, so that's where we'll leave it for this morning. If there's any questions, please go ahead and type those through. Any questions, please go ahead and type those through. But we're at this, again, very difficult market because of the variables that we have to look at because they're all affecting the market. But I think we are at sort of a potential fork, you know, de-escalation versus escalation, and I think the market is tending towards de-escalation. Is it going to be correct? Are they correct? That I don't know. That we're going to have to see. And if it's not the right path, if there's actually escalation, or the market's going to discount that, I would expect very quickly. All right, guys. Thank you very much. Let's leave that. Let's leave at this point. We'll do it again tomorrow, and you guys have my email address, so just email me as you need. Thanks very much, guys.